Good morning. Today's Monday. I just wanted to say good morning. It's the beginning of a new month, November. It's November 1st. So, welcome to the new week. And exciting things are going to happen this week. So, let's start out here with global stock rally as strong as earnings drive optimism with investors looking to key federal decision ahead. What do you think the Fed is going to do? It's pretty interesting. As we go through this, the one thing I just want to talk about, it's pretty interesting as we talk about the Fed. What's the Fed really trying to do? They're trying to stop inflation from happening, right? They're also trying to regulate the cash flow. So it's pretty interesting. And if you really dive deep, you go down a rabbit hole pretty deep and you start it doesn't make sense. So as we go through this, I'm probably going to put together a whole nother series for you where this whole process goes through a unique process. So we'll talk about how the Treasury issues bonds, right, or Treasury notes, and then the bank buys them, right? So all of a sudden the Treasury says, "Listen, we're going to issue some Treasury notes and or bonds." So they go ahead and we go on the open market and they put that out there. The next thing you know, what happens is the banks go ahead and say, "Listen, I'll bid on that, I'll bid on that, I'll bid on that." And this is 75% of our whole financial market is built off of Treasury notes and bonds. Pretty interesting, right? Equities is a small little piece. Crypto is even smaller. So as we look at this, we really have to ask a question: what happens here? The select banks, let's just say that, will go ahead and bid on these Treasury notes, the bonds that come out. And when they do that, what they do is they bid on it, they take that federal Treasury note, that bond, and then they go over to the Federal Reserve. And they go ahead and say, "Listen, I'm going to give you this bond I just bought, and in lieu of that, you're going to give me money back." And now that's a debt for us. This is where our deficit comes into play. So when we look at the government deficit spending, the Fed now, there's $0 over there. No one's auditing. You can't audit the Federal Reserve. They issue all of these monies out so that we can keep the economy rolling. It's actually really great counterfeiting if you really think about it. So what happens in this whole process, the global economy really depends on the US dollar. It's fiat currency. It's not even currency. Currency is actually like before 1971, before Nixon said we are not backing the US dollar with gold. Before that, you could actually go in and give $20 and get a $20 gold piece in return. And what happened was across the whole globe, the US was taking reserves and building up their reserves with gold and issuing greenbacks, the dollar, the US dollar. And then in 1971 said, "Nope, you can't get your gold back. We can only give you dollars back." Pretty interesting, and that shifted the whole economy. So today, what we're dealing with, what you think is currency, isn't really currency. It's just an IOU note. It's a debt note is what it is. So when we look at real currency, that's gold, silver, right? We could even look at crypto maybe as a currency. There's debate right now on certain things like XRP being a security or not. What is going on with that? So we'll find out as time goes along, but what we know as a currency, the dollar bill, it's not. All it is a debt note. So as we look at the global stock rallies, as strong earnings drive optimism with the investors looking to key Fed decisions ahead, what is the Fed going to actually do? So as we go forward, we really want to look at a couple things. So let me go ahead and scroll this down for us as we go into this. And it's going to be pretty interesting. So we're seeing the stocks climb on Monday as investors continue to feel positive about the U.S. earnings season. So far we've had a robust season, which is great. We ended the third quarter pretty well. We'll find out what's coming out on that with CPI numbers and so forth. But as we move forward, we had a strong year so far, strong quarter. We really see in the transportation realm this continuing on all the way through 2022. So yet major central banks look poised to start, dialing down their support. So as this actually happens for the economies this week, it's going to be pretty interesting because we may be seeing banks raising their interest rates. If they do that, it's going to kind of put everything in check. We got some other things we want to talk about too. The Federal Reserve is expected to reveal plans to reduce its $120 billion a month in bond buybacks on Wednesday. So when we were talking about the Federal Reserve, they normally take these bonds from the banks that went out to private bid. You don't hear about these bids, right? These are private. So these private banks go ahead and buy these treasury notes, and then the Federal Reserve opens their doors and says, we'll take those. It's almost like a shell game. So as they do that, now they're saying they're going to reduce its $120 billion a month in bond buybacks. So they're not going to be taking those anymore, which is going to be pretty interesting as we move forward. As we go through this, let me scroll down just a little bit further. Earnings season continues this week with Berkshire Hathaway, Moderna, and Airbnb among the companies scheduled to have their reportings released. So it's going to be interesting, especially with Moderna. They had a little shakeup. They were up to $450 a share, and they dropped down to the 300s, mid 300s. So it'll be interesting to see what happens. But however, investors remain wary that the world's most powerful central banks could soon, maybe they will dial down the huge amounts of monetary stimulus that have been supporting the economies during the coronavirus. So let's see what happens here. Are they really going to be doing that on the central banks? Remember, the central banks, they're privately held. They're not owned by the federal government. They're private, and you don't know who really is running it. So it's pretty interesting. The Fed is due to reveal its latest monetary policy decision on Wednesday. So Wednesday is going to be a great day to really find out what the Fed is actually saying. And Wiley, it's expected to announce that it will start tapering and cutting back its $120 billion a month of bond purchases. So if you look at this, there's some other notes here that I just want to go over, but that's lifting the benchmark of interest rates. So it's going to be interesting if we could be seeing an increase in interest rates. What's going to happen with that? Traders are betting that the Bank of England becomes the first big central bank to raise interest rates on Thursday. Now, if England does that, it's going to be a shock felt around the world. Someone has to do it. And when that happens, who knows what's going to happen. But over the weekend, Janet Yellen, U.S. Treasury Secretary, Sunday moved to squash concerns about the economy. And what she said, she quotes here, "I think what we're going to see is good, solid recovery. The unemployment rate has gone down considerably, and this is nothing like the recovery from 2008 financial crisis." And so remember, that was where the housing market, we were lending out to anybody and everyone. They basically, you could get 3-4 loans based on, making under $100,000. And they were just giving it to you based on who you are. And they said, no problem, you don't have the money, we'll go ahead and we'll give you 2 loans on that loan. One will give you cash back on 20%, and you can use that for your deposit. Really, really shaky, little sus over there in 2008 we all saw it coming, right? It was crazy. So the whole thing, the deck of cards collapsed, and still today, no one has gone to jail for that. And banking had a lot to do with that. So without getting more into that, let's just take a look at some other things going on. Let's look at this. As of 2021, the U.S., let me minus that out a little bit. The size of the bond market, the total debt outstanding is estimated to be $119 trillion worldwide and $46 trillion for the U.S. market, according to the Securities Industry and Financial Markets Association, the SIFMA. So pretty interesting. So as we're going through this, you can see $119 trillion worldwide on the bond market. So when we're issuing these bonds, notice these bond markets over the 60s, 70s, and 80s really, really was powerful. And the aggregate gross amount of the treasuries can borrow is limited to the United States debt ceiling. So what's a debt ceiling? What is a ceiling? The ceiling is something that you just can't go past, right? Wrong. You can get past it no problem with the help of Congress. So when Congress is going through this, they can go ahead and issue to move the debt ceiling up. So let's take a look at this. And right now, as of the 31st of 2020, the federal debt held by the public was $20.83 trillion, and intra-government holdings were $5.8 trillion for a total national debt of $26.7 trillion. So as we look at this, we're really writing a whole bunch of checks that we can't cash. We really can't. Let's go to this news. I'm really paying attention to what's going on with the imports into this country. It's pretty interesting. California, more than 70 cargo ships queue outside Los Angeles and Long Beach ports amid surge in the U.S. imports. So as we're going through this, it's pretty interesting to see what is actually going on. So as these ships are just sitting out there queued, around 70 cargo ships queuing outside two of the biggest ports in the U.S. due to increasing demand for imported goods. So what does this mean for us right now? It means that there's a lot of goods coming in for some reason. We're stocking up on things here in the U.S. And if you look, the rates for these cargo ships coming in have quadrupled. What's going on there? So as we continue to have more and more goods coming in, they're just sitting there because we don't have enough ports to actually service that. The longshoremen, they're working 24/7. They really are. It's bigger than we think. Plus, they're not getting reloaded with these empty containers going back. They're just going back. So what's going on with that? We're going to end up with a whole bunch of empty cargo container ships here in the United States, and they're not going back, and we have a huge imbalance of import-export, which is pretty interesting. Around 60 ships were waiting in the California coast last week, but the record-breaking figure jumped to 73 at the weekend, with other ports also unable to help clear the backlog due to the lack of capacity. So what's going to happen as we move forward into this whole world of everything being stored, right, out on the ocean? How do we get these ships in and service quickly? And why is all these goods coming in so quickly? Why are we stacking up? Is there going to be a shortage? Are we forecasting a shortage? I could just tell you this, that with all those ships coming in, transportation is going to be at an all-time high here continuing, and we're probably going to see inflation as well. So hopefully the Federal Reserve kind of knows this is coming as we're moving forward and puts things in check so that we don't have super inflation going on and meats costing twice as much as they normally would, bread, milk costing twice as much, because it's pretty interesting as we're going through this whole cycle with the Treasury, with the banks, and then the Federal Reserve. As we're going through that, our dollar, that IOU note that we have in our wallet, it's becoming worth less and less and less and less the more that the Federal Reserve keeps printing more and more money. So we're diluting it as we move forward. So this is what's in the truck for this week, for today. So we will see what's going on later on. So as we're looking at our transportation, these are some things that we should really put in mind to really see how all this kind of funnels together and make some sense of everything that's going on here in the economy. So with that, what is in the truck? Jim Becker signing off. Thank you very much.